Welcome, friends. My name is Avinash Gorakshekar, and I welcome all of you to another interesting episode of Konexio HighFlyers. In such kind of episodes, friends, we always make an effort to introduce, emerging companies from emerging sectors, and we discuss about their companies' growth plans, their growth journey, and we make an effort to talk with the promoters of such companies so that we can all understand, such companies much better. And today, friends, we got a very interesting company by the name of UniHealth Consultancy Limited. In fact, we have the privilege and the pleasure of having the Managing Director, Dr. Akshay Parmar. Akshay ji, thank you very much for sparing your valuable time with us today. In fact, in this small interaction, I'm pretty sure we'll be able to understand your company's operations much better.
Thank you, Avinash. Thank you, for having me out here with you on this particular platform. It's surely an honor to be here.
Yeah. Yeah. So, Dr. Akshay, first question, which is very elementary and which would help all our investors to understand your company better, is that if you could explain to us, what is the business model of our company and what is the positioning of UniHealth as of now in the global market? Because I understand that, our company has got a large exposure in the African continent. So, if you could tell us something about the business model and the positioning, and in a very small way, if you could tell us, how was the business journey? How did it start? I believe, you all started when you actually, were doing your, internship. So basically, if you could tell us in a small way, a narrative that, how did this journey start, and, then enlighten our, viewers.
Surely. So, yes, like you rightly mentioned, this journey started way back in 2010. I was doing my MBBS. It was my final year internship. So, Dr. Anurag Shah, my co-promoter and a very close friend, and myself, we both started this as a bootstrapped startup back in 2010. Initially, we started from our small office in Kalvadevi, and the first vertical of the company at that point of time was medical tourism, or what is commonly also called now as medical value travel. It was a buzzword back then. It was a growing industry in the healthcare sector. So we decided to take a plunge into the medical tourism vertical of this particular growing industry, the healthcare industry. So 2010 onwards, UniHealth was mainly focused on streamlining the process of medical tourism, which was basically getting all the patients from across the globe, from multiple countries across the world, into India at different hospitals to cater to their medical requirements. So from that perspective, we started our journey. 2011 was a milestone year when we entered into a unique collaboration with Aditya Birla Group's hospital, Aditya Birla Memorial Hospital, which is there in Pune. It's a 500-bed quaternary care hospital. So with them, first time in the industry, it so happened that the entire international business of a hospital that big was outsourced completely to a separate company, and we were representing Aditya Birla Hospital world over, marketing their services, and also managing all the on-ground ancillary requirements of international patients. So we had a small office within the hospital, and we were coordinating everything for an international patient right from the start of their journey back in their home country till the time they were, again going back, traveling back to their home country after the entire medical treatment was done. 2013 was another important landmark year for us when we collaborated with Ethiopian Air, which is the largest private sector airline of Africa. And under that collaboration, we launched something that we called the UniHealth Ethiopian Air Medical Travel Program. So what it allowed UniHealth to do was expand its footprint to more than 40 countries across Africa, which were the key target markets for our medical tourism industry at that point of time, using the Ethiopian Air physical offices in all these countries. And it allowed us also to piggyback on the Ethiopian Air brand, which is very strong across Africa. And it's a preferred airline used by majority of the travelers who wanted to travel out from their respective countries. So under this particular brand, the patients were getting a 25% discount on their airline tickets, and they were getting a one-stop solution at the physical offices of Ethiopian Air. So that allowed UniHealth to grow massively in the medical tourism industry. 2015 was when we decided to take the next step forward in the growth of our company, and we started investing into Africa to set up small medical centers and dialysis centers. The first center that we invested into setup was in Tanzania. It was called the UniHealth Medical Center, and 1st of Jan 2016 was when we commissioned it. So from there started our on-ground journey in Africa, where the company started making investments and growing in a very fast-growing segment of the industry in a unique manner, where the services that we were offering were not unique in nature. It's standard hospital and healthcare services, but it was in a unique geography. It is in a geography where the supply demand gap has been, massive. So that is where we put our focus onto. Since because of medical tourism, we had an idea of the geography of the African continent of various countries. We already had some presence, so we understood the markets fairly well. 2016 onwards till today, we've expanded from Tanzania to Uganda and Nigeria. As we speak today, we are the largest private healthcare player in Uganda. We have a 120 bed tertiary care hospital, a state of art facility. We are also the largest private healthcare player in northern Nigeria. We've got an 80 bed hospital in Kano. We've got medical centers and dialysis centers in Tanzania, and we are looking to grow that footprint in the coming 2 to 3 years now. So while we speak, we've got a network of 200 hospital beds that we are directly operating under the UMC Hospitals brand. 2019 2020, what we forayed into was another vertical of this growing industry, which is healthcare consultancy. So when we were setting up our facilities in Uganda and in Nigeria, we created a very strong on-ground team out here in India, which comprised of project managers, architects, procurement managers, structural engineers. So we decided to take the jump forward and use this team to the benefit of the company and mark its presence into the consultancy services segment. So today, that particular standalone business unit of the company is providing services right from project conceptualization all the way till execution and commissioning, right from designing the architectural part, the equipment planning, assistance with procurement, IT services, and the commissioning of these facilities. As we speak, we are providing services to projects in India, in Myanmar, in Angola, Kenya, Tanzania, and the cumulative bed strength of all these projects put together is more than 1,000 hospital beds that we are directly doing right now under our consultancy services division. 2020, when COVID came in, that is when the fourth vertical of the company took shape. I was stranded out here in India. I was unable to travel for almost 6 months. So what we did was, since we already had our hospitals, we already had our logistic supply chain ready, where we were already exporting certain medical consumables to our own hospitals for captive requirement. We decided to take it one step forward and start supplying to other medical centers, hospitals, and agencies on ground in these countries. So we started, setting up a complete distribution channel, and we became the authorized distributors for certain leading Indian manufacturers in both the pharmaceutical and medical consumable space, and that became a critical fourth vertical for the company. Today, we are authorized distributors for these manufacturers in Uganda, in Tanzania, in Nigeria, and the entire business has now become like an interlinked business model, where one vertical of the business is supporting the other vertical in either in terms of allowing it to generate higher revenues or providing it with business opportunities, or even increasing the profitability and the profit margins for the company. So it's a unique interlinked business model that we are following for all our facilities in Africa, as well as all the proposed businesses in India that we are looking forward to.
So I think Dr. Akshay, very well articulated by you. Now tell me one thing, if you could tell us, what are the products and services which you offer, as far as your hospitals and the medical centers are concerned. And one question which I wanted to ask you is that for your hospitals in Africa, how do you source the doctors? Because the team at the hospital is very critical. So is this sourced entirely out of the local markets like African markets, or do you obviously also appoint Indian doctors who get deputed to Africa? So इसके बारे में थोड़ा बताइए.
Ji. So, your first question about the services. So, our hospitals, all these hospitals, the two hospitals that we have both in Uganda and Nigeria are tertiary care hospitals. So, typically, अगर आप service matrix को देखेंगे, so from that perspective, we are equivalent to a 200 to a 250 bed hospital in India. So, we are offering almost all major specialty services, all different, diagnostic services. So, we've got very high-end laboratory to provide all diagnostic services. Our radiology department is equipped with digital X-rays, with CT scan, MRI. Our theaters are modular theaters, which are equipped to perform specialized services like laparoscopy, endoscopy, orthopedic, spine surgeries, neurosurgeries, which we are successfully, performing as we speak as well. So we are doing almost all different specialties out there. The key specialties or centers of excellence are orthopedic and spine, neurology, nephrology, neurosurgery, gynecology, and mother and child care, pediatrics. So we've got state-of-art pediatric and neonatal ICU at both of our hospitals. We, in fact, have the largest ICU bed strength at both the facilities. In Uganda, it's the largest in the country. In Nigeria, it's the largest in northern Nigeria. So we are a tertiary care hospital at par with any 200 to 50 bed hospital in India in terms of the service matrix. It's just that the bed strength differs, where we have about 120 beds in Uganda and 80 beds in Nigeria. Coming to your second part, where the sourcing of doctors. So initially, when we set up these hospitals back in 2017, at that point of time, we had a good number of specialist doctors which were deputed from India. So we had expatriate doctors from India positioned in different departments in Uganda and in Nigeria. But over the years, what we realized is that doctors is not a very big challenge. These countries have very well trained local doctors as well. So the governments to promote the healthcare sector in these countries has over the years been actually supporting and providing scholarship to their doctors at the undergraduate level and sending them to countries like US, UK, and even India for post graduation and specialty services. So these doctors out there are very well trained. So today, over the years, after realizing this, we have replaced majority of expatriate doctors with local doctors. Definitely, even today, we've got a few specialists from India, even from Cuba. So we've got expatriate doctors on ground in Uganda and Nigeria. And we've got a good number of doctors who fly in on a regular basis. So there are certain super specialty doctors who fly in on a regular basis, like every 6 weeks to 8 weeks, and do medical OPD and surgical camps out there using our infrastructure. So it's mix of a model where the full timers are mainly local doctors, and we've got Indian doctors flying in on a regular basis to perform surgeries.
Okay. I think understood, Dr. Akshay. Now tell me one thing, in your both your African hospitals in Uganda and Nigeria, I want to understand, what is the shareholding structure? Is it a 100% subsidiary of the company, or is there any local partner in Africa which also holds some stake in these hospitals? So if you could clear this point.
Yes. So as a standard policy, when we started in 2015, when we decided to start investing into Africa, one critical pillar of our policy was to not venture out completely alone. So we had decided at the outset itself that we will look out for partners in these respective countries who can provide us a strong administrative support initially, who can be our liaison partners to navigate the bureaucratic processes in these countries. So both in Uganda and in Nigeria, our companies are joint venture companies where UniHealth Consultancy holds 50% equity, and the 50% equity, the balance equity, is held by our local partners who are based in these respective countries. So in Uganda, we've got Ugandan partners. They are an Indian origin family, but it's a fourth generation Indian origin family. And similarly in Nigeria as well. So yeah, this is the overall structure. One important factor, however, in this partnership is that our partners do not come from the healthcare sector. So they are not on-ground operators of these facilities. So both these hospitals have the UMC Hospitals brand, and the complete operational aspect of these hospitals is taken care of by UniHealth Consultancy Limited. So it is our ground presence which is making a difference in terms of operating these facilities. These partners are more so equal investors in terms of the equity investment or the funding required, the capital invested into these facilities, and they provide us with this strong support in terms of, like I mentioned, the bureaucratic processes, the administrative support. But the healthcare aspect of the business is taken care of by UniHealth.
Okay, understood. Dr. Akshay, now one thing I want to understand is that if you could share with us, what is the global opportunity for UniHealth, from the African continent? Because, we have a large exposure in Uganda, Nigeria. I read somewhere that even in Tanzania, we have got some exposure. Now, can you tell us in a
Yeah.
very small way, in some kind of, financial way, typically in terms of what is the market opportunity for our company to grow over the next, say, 3 to 4 years? Because very few, hospitals we find basically are Indian owned and are operating in the African continent. So for us, Africa continent is very important, in terms of future growth also. So if you could
Right.
share with us what is the market opportunity and how is UniHealth, positioned to grow, from this market.
Right. So when it comes to healthcare, the biggest positive aspect of this industry, especially post COVID, is that there is massive awareness. So even in Africa, the awareness quotient, if I can say it that way, for healthcare services has increased, multifold because of COVID and all the issues that came up during COVID. The supply demand gap is also massive in these countries. There are challenges where these countries are underserved when it comes to quality healthcare services, especially in the specialty segment. If we typically only look at the population of these geographies, so Uganda is about 4.6 odd crores, Nigeria is more than 21, 22 crore people. Similarly, Tanzania is about 6.5, and Kenya is about 5.5 crore. So if I put all this together, we are looking at a significant population, in terms of the market size, overall market size. Now, in terms of the population as a continent, Africa has about 11% of the world's population, but the disease burden accounts for more than 50%. So, that itself is again a big factor where the disease burden, the lifestyle disorders in these countries in Africa is increasing multifold, but they are not able to cater to the healthcare requirements of the population. There's about the overall market size, if I can put it as per the statistics by IFC, International Finance Corporation, is about 259 billion US dollars, and about 30 billion US dollars is already earmarked for investment in infrastructure for healthcare services. So the potential for growth is massive. The benefit that UniHealth has is that we already have a proof of concept on ground. Like you mentioned, that there are very few or almost negligible Indian players, established Indian hospitals with a presence. It is also true for international hospitals. There's no international healthcare chain which is present in Africa in a very big manner. So UniHealth has that on-ground presence and a proof of concept, which itself is going to work to its advantage as we move forward in the next 2 to 5 years.
Okay. Understood. I think very nicely articulated by you. Now, Dr. Akshay, also tell us what is the size of the Indian, medical tourism market. You mentioned this, in your initial remarks. Now, tell me one thing. First of all, what is the kind of opportunity you see in the Indian market for this segment, and what are the services which UniHealth provides in this segment? So, if you could please give us inputs here.
Right. So when we started, this Indian medical tourism market was pegged, was estimated to about $2 billion back in 2010. It was estimated to reach $2 billion actually by 2014-15. But as of 2022, the industry size is estimated to be somewhere between 7.5 to $9 billion. So, the growth has been significant and is expected to grow at almost a CAGR of 19 to 20% in the coming 10 years. So the focus, even if you look at the government, there's massive focus not only on Indian medical tourism but even wellness tourism. So as an entirety, it's the allopathy part, the traditional treatments, the Ayush aspect, the wellness tourism. There's a massive focus by the Indian government as well. So we do expect significant growth in this particular industry in the coming 5 to 10 years, if I can say that. And there are certain critical cities which are developing the medical tourism industry in a very big manner. So you've got Delhi NCR, you've got Bangalore, you've got Chennai. These have become big centers for attracting international patients into India. Also, the way Indian airline aviation sector is well connected with Africa today, that also acts, as a plus point, because it's easier for patients to travel from these countries. Today, we've got direct connectivity with Kenya, Tanzania, Uganda, Nigeria. So that is also acting to the benefit of this particular industry. When it comes to UniHealth and the service portfolio, like I initially mentioned, since it was the first vertical of the company, it is very close to the management's heart. So we provide a turnkey solution right from the time the patient decides that he needs medical treatment services and wants to travel to India. So we handle the patient right from there till the entire process is completed. So whether it is coordinating with the doctors to get video consultations done initially, helping them with the documentation process, whether it's the application for passports or the medical visas, getting their airline tickets, providing concierge services on their arrival out here, getting all the appointments done with the doctors, the treatment planned in coordination with whichever hospital they've decided to go to, and bringing them back to the airport, sending them back home, and also creating a module or a modality where their post operation or post treatment care is also taken care of. So we do have follow up consultations over the video, and if required, we also encourage them to travel back after a year or so for the follow up, depending upon which treatment they've taken when they were in India and what the need for that patient in terms of follow up is. So yeah, so the market size is growing. UniHealth is also, we are also working on unique models. Like I mentioned about the Ethiopian Air collaboration. So there are certain unique models that we work upon, which differentiate us from our peer group or from our competitors, and on the basis of which we are expecting a significant jump for this vertical of our company.
Okay. No, understood, Dr. Akshay. Now, tell me one thing, Dr. Akshay, like, very broadly, what could be our total active customer base, over the years? Like, if you add up the Indian medical tourism market, you look at Uganda, you look at Nigeria, how many patients in all, possibly, the company has, cured, typically just to get an idea about what is the scale at which the company is currently operating.
Right. So at present, if I can say, as of 2023 financial year, on an annual basis, we have been catering to about 100,000. That's 1 lakh patients every year across our different facilities in Uganda, Nigeria, Tanzania, and also the medical tourism aspect where patients are coming into India for their treatment. So we are catering to more than 100,000 patients every year, and this number we expect to significantly grow in the coming 2 to 5 years. Primarily on two factors. One, we are adding certain super specialty services, which will add on, a significant jump in the patient number at our existing facilities, and we are also looking to add on significant number of hospital beds or centers as we go forward in the next 2 to 3 years, which again will add on, a massive patient base to the company.
Okay, understood. Now, tell me one thing, in all our services which we provide, Dr. Akshay, how is the pricing decided? Like, is it a customized kind of, effort, or is it a package which you have for your customers? How is the pricing decided? If it is super specialties, super critical, then based on the doctor requirements, based on the costing, I mean, how is the overall pricing done? Because, one thing which I observed in your company financial is that your profitability at the operating level is very solid, almost 34%, which is really great. So tell us how the pricing is decided in a very, very non general way. Like, how do you decide, whether it is for oncology or whether it is cardiac or neurology? How is the pricing decided? Is it a simple package which you offer to customers, or is it purely customized?
No, so see, the entry level services, that's basic consultation services, or your lab and radiology tests and everything, that is decided by each individual unit based on the competition, based on the local pricing that is going on, based on what the insurance companies are offering or what the different corporates are offering. But when it comes to specialized surgical procedures, whether it is being performed by a local doctor or whether it is being performed by an Indian doctor, that is where, because the competition is negligible, there are certain procedures that perhaps only we are being able to offer. So that is where the pricing matrix changes considerably, and we are able to derive a much higher, I would say, a price for the services that we are offering. And when we have Indian doctors travel from India for specialized medical OPDs and surgical camps, that is when we get another significant jump, because the patients are ready to pay a premium to get operated by visiting Indian doctors over the doctors who are already positioned out there locally. So that is also one big
Okay.
boost that the company gets in terms of its profit margins, if we are to rationalize it over the entire year.
No, understood. I think, Dr. Akshay, now one thing I wanted to ask you is that since you said that there is very negligible competition in the markets in which you operate, tell me one thing, what are the key qualitative factors which have helped UniHealth to establish such a strong presence in the African continent? Like, in your words, if you could tell us some qualitative, checkpoints, like what is it that makes these, patients trust UniHealth so better? And even growth, as you rightly mentioned, in the future is also going to come in. So, 2 3 points if you could tell us on the qualitative side, because financials, all of us are aware what are the numbers, what are the, margins, but in your perspective as a doctor, what is it that you bring as value on the table for these, customers from Africa?
So, I can sum this entire thing up in one single statement that we are taking the Indian healthcare model to Africa. So the difference between us and our competitors who are majorly local players is that they have structured their infrastructure, be it the way the hospital layouts are, where the services are, where the equipment is, and where the standard operating protocols are in the African manner. They've customized it based on their understanding of their own geography. But for us, because we are an Indian group originally, and fortunately, both me and Dr. Anurag, both of us come from the medical background. We have a better understanding of the service requirements for these patients. We have taken the Indian healthcare model out there. So when it comes to infrastructure, when it comes to planning of the entire hospital building itself, it is patient centric to a large extent because we've seen hospitals how they've been designed in India. When it comes to equipment, again, we have the advantage over the local competitors because we've been able to source some of the best equipment from India and take them out there at a fraction of cost compared to what the local hospital would have procured. And even our operating protocols are something that we've derived from an understanding of Indian hospitals. So whether it's quality in terms of customer care, quality in terms of treatment, all of this is making a big difference in the overall patient experience when the patient visits a UMC hospital versus visiting a local hospital or a competing hospital which is there in that geography.
Okay. No, understood. I think very nicely put out by you. Dr. Akshay, now tell me one thing. If you could tell us broadly, the broad financials for FY23, that is in terms of revenue, in terms of profit, and during the first half of September, if you could give us some color as to what has been the kind of performance of UniHealth. So if you could share those numbers with us.
Right. So for fiscal 2023, that's 31st March 23 ended, we had consolidated revenues of about 46.03 crores, and we achieved an EBITDA of 15.9 odd crores, which is at a 34% EBITDA margin. And the profit after tax registered by the company was roughly around 7.7 crore rupees, which is a good 16.7% of a PAT margin. These are consolidated figures, so we take into account only the proportion based on our shareholding. Like I mentioned, in Uganda, we have a 50% equity, or in Nigeria, we own 50% equity. So accordingly, the consolidation has happened in that proportion itself. For the half yearly of this ongoing fiscal, our consolidated revenues are about 22.85 crores at an EBITDA of 7.84 crores, which is again at a 34 plus percent in terms of the EBITDA margin. And our PAT stands at 4.3 crores, which is roughly around 19%. So, yeah, we've been able to maintain our EBITDA margins at 34% plus over the last 2.5, 3 years.
Okay. Understood. Dr. Akshay, now tell me one thing. Like I believe a few months back the company had made its IPO where it raised about 55 odd crores. Now, if you could tell us, what was the objective of this IPO, from the company standpoint, and what has been the utilization of funds? Have the funds been completely utilized, or some part of it have been utilized? The remaining are going to be invested. If you could add some color on that.
Right. So our IPO was, we got listed on 21st of September. So typically the first half of the year, the figures that I've given can be considered as a pre-IPO figure in all, in all perspective. We have started deploying the funds that we received. We raised more than 55 odd crore rupees. The primarily agenda of raising the funds was aimed twofold. One was towards the capital investment that we intend to make in our existing facilities to add certain super specialty services like ophthalmology, like infertility, IVF treatments, like cardiac care. So a part of the IPO proceeds are going to be invested into procurement of equipment for these particular super specialty services that we want to roll out both in Uganda and Nigeria. Part of it is going to be earmarked for the hospital that we are putting up in Tanzania. So we are coming up with a 100-bed hospital in Tanzania in two phases. Phase one will be 50 beds, and we'll be adding on another 50 beds later on. The company is also coming up with a medical consumable manufacturing unit in Tanzania. So we are coming up with the first phase is going to be disposable syringes, and then we are going to be adding on a variety of medical consumable products in the similar segment. Something which is aligned to disposable syringes in terms of the raw material required and the end use as well. So we've earmarked certain funds for that. Proportionately, some funds have been earmarked for working capital requirement because in countries like Uganda, where we are already or where I can say we are the only empaneled hospital accredited by United Nations for Uganda and the neighboring 7-8 countries. We are also the preferred hospital of choice for the Ugandan military. So some of these institutions, which are backed by the government, their payment cycles can range between 6 to 9 months. So the working capital requirement is significant if we are to grow the business in Uganda. So certain part has been earmarked for or reserved for the working capital requirement of these units. And a small portion of this is for general corporate purposes, which is basically being deployed to increase the bench strength of senior executives at the company for future expansion and growth, and also for training of the manpower across different verticals, so that they are well equipped when we are to position them in these newer geographies in Africa where we are planning to expand. A small portion will be used towards marketing of the various verticals of the company, and also towards increasing the procurement capacity when it comes to the distribution vertical of the company. So the medical consumables and pharmaceuticals that we are exporting, so we will be deploying certain funds, or we've already started deploying certain funds to increase that particular business as well. So we have a better holding capacity. We're able to ship better and rationalize our expenses or costs in a better manner.
Okay. So understood. Dr. Akshay, now coming to the profitability margins, since you have been mentioned and that now you're going to add a new hospital in Tanzania, plus you're going to put a syringe manufacturing unit also there. Now, tell me one thing: once these businesses start generating revenue and they become operationalized, do you expect the EBITDA margins to at least get slightly better, or obviously will you at least try to maintain these margins? And secondly, I understand that the company has put a target that over the next say 2 to 3 years, you all will have roughly about 1,000 beds across Africa and India and 25 medical centers. So I just wanted to know, with these kind of aggressive growth plans, can we assume that the top line growth of our company, which was, if I was not wrong, please correct me. Last year, I think it was about 20%. So can we expect that this run rate will get more aggressive, because next 3 years, 1,000 beds, and today I believe we are about 200, 250 beds. So, the number seems to be very aggressive. So, first of all, what is the strategy of the company? Do you plan to put up more hospitals, or do you have asset light model, or tying up with some other hospitals in Africa or maybe in India? If you could, share your thoughts on this, because this number is very interesting. We would love to hear what is the kind of thought process as to how you will make it actually operational.
Right. So in terms of the EBITDA margin, definitely, as we move forward, one, we will be looking at maintaining the EBITDA margin and obviously growing it as well. The next 2 years, I wouldn't say that the EBITDA margin will grow significantly, because there are going to be certain areas like, the super specialty services that I mentioned in our existing facilities. They're going to operate at a much higher EBITDA than what we are experiencing right now. But simultaneously, the new investments that we make, the new hospitals that we put up, the medical centers, they will have their initial, teething period of about say 6 months to 9 months, when that revenue is going to grow, in a sequential manner. So out there, during that particular 6 9 month period, we may not be able to derive the EBITDA margins at par. So when I am going to be looking at both these in a consolidated manner, we will be able to maintain the EBITDA margins that we have been experiencing right now, which is roughly around 34% plus, or maybe witness a small jump. A significant jump or growth can be witnessed only after a period of 18 to 24 months from now, after the deployment has happened, after the facilities have been commissioned. So that was point one. Definitely maintaining the EBITDA margins is of top priority, and we are quite confident that we will be able to do that even as we witness a growth in our revenues, both from the existing infrastructure by investing into the super specialty services, and from the new infrastructure that we intend to make. Now, the jump from 200 beds that we have presently to 1,000 beds, so there is a mix in which where another 100 beds that we are looking at are going to be by investing into the required infrastructure to some extent. But beyond that, the company is also in discussions at initial level with multiple partners for operations and management. So we are, because like I mentioned earlier somewhere, that we have the advantage of having a proof of concept in Africa. We have a presence in Africa, which itself is deriving a lot of trust from local players out there. So we are looking at existing hospitals where we may be acquiring the operations, or we are also discussing with certain new hospitals which are coming up to take over the operations and management once they are commissioned. So the next growth phase is going to be more on an asset light model, where the investment made by UniHealth Consultancy is primarily going to be in the working capital requirement or the operational aspect of the facilities, and to a smaller aspect maybe into the high-end specialized equipment, say maybe the MRI equipment, or certain dialysis units or something of that nature, which is critical to increasing the profitability of the company, and which in itself, that investment in itself can be a revenue stream for the company. So we are looking at an asset light model when we try to expand from 200 beds to 1,000 beds, so that we have that liberty to grow faster. And there are good number of assets available on ground in these different African countries today, where we can venture out and acquire them on a O&M model, especially because we have our existing presence out there, and we are able to develop that trust with the infrastructure, the principals, the owners of these infrastructure buildings and hospitals. So we are able to do that. One more important aspect is that while we grew from 200 beds to 1,000 beds, about we'll be looking at about 300 to 350 beds of this particular bed strength from India. More so from western part of India, maybe Maharashtra and Gujarat, to be more specific. We are also focusing on O&M in India. We are not looking at investing in infrastructure, but we are already in discussions with certain projects where we will be keen to look at the O&M aspect of these hospitals. And the model that UniHealth has is something we call the DBO, design, build, and operate. So there are a lot of consultancy projects that we are doing as of now, which are backed by players who are not from the healthcare industry. So they are either they are investors, pure investors, or real estate developers, or non-profit organizations and institutes who want to make a difference to the society and are investing in these healthcare projects. But they are not keen to operate it because that is not where their the expertise lies. So they will be looking outwardly for outsourcing the operations, and that is where UniHealth becomes a key player, because we have been associated with these particular projects from the conceptualization stage onwards. So that is also something that we are actively pursuing and looking forward to in the coming 2 to 3 years, when we are looking to expand from 200 to 1,000 plus beds.
Okay. Dr. Akshay, now tell me one thing just for clarity that, you said 300, 350 beds would come in India on basically on an asset light, model. The remaining beds are going to come in the African continent. Is my thinking right?
Yes, yes. The remaining beds are going to be coming from the African continent. More specifically, we are targeting 2 or 3 key African geographies which have a sizable population, which have a well-defined healthcare market as well. So, amongst these, on the top priority right now is Tanzania and Kenya. So, these two are high growth markets with great potential that we are looking at.
Okay. Okay. Now coming to the working capital side, you mentioned, broadly, that the working capital cycle is slightly long when it's a government-related customer. But typically, what is the working capital cycle in our business, Dr. Akshay? And typically, in terms of the financial aspect, most investors like to know what's the cash conversion cycle, right? From the time you set up the facility, give the service to the client, and then you get paid for your service. So typically, हमारे business में, what is the kind of working capital cycle which normally operates, and what UniHealth is actually experiencing?
So historically, if you have to see the typical working capital cycle or the cash conversion cycle that we have seen is roughly around 120 days. It may be plus or minus 5 odd days for different periods. So again, the challenge I would say for a lot of these geographies is, I mean, I'll have to take each geography separately. So when I'm talking about Nigeria, it's more a cash paying patient. So the working capital cycle is very small, because 70-75% of my patient base is cash paying. The remaining 20-25% is from certain corporates, and a small percentage from the insurance companies. So out there, the
Exactly.
conversion cycle or the working capital cycle is smaller. When it comes to Uganda, like I mentioned, where we are providing services, or we are the preferred service provider for Ugandan military, for national water, which is again a government dependent organization, or a PSU, if I can put it that way. So out here, the payment cycle can go much longer. So the Ugandan military payments are received by us somewhere between 6 months to 10 months, depending upon the
Okay.
cycle. They've got quarterly budgets. So whether if you given a
Okay.
service for in the first month of the quarter, then your cycle is going to be longer for realizing that particular aspect, because your payments are getting cleared on a quarterly basis to a large extent. But the
Okay.
benefit again in Uganda in this particular cycle is that what we are being able to build to the Ugandan military for the services is much higher than what we would bill to a cash paying patient. So the
Okay.
cost of funding is already factored in. And in historically over the last 25, 30 odd years, in our discussions and in our own experience over the last 5, 6 years, there's never been a problem in terms of recovery. So it's not a big process. It's not something that we have to worry about. there has been 100% recovery across all different sectors, whether it's healthcare or other suppliers to the government. It is just that the payment cycle is fairly long compared to developed markets like India.
Okay, no, understood. I think very nicely again mentioned by you. One could get an idea about how the working capital cycle behaves in both the Ugandan and the Nigerian markets. Now, tell me one thing broadly, Dr. Akshay. Since COVID is over, normalcy has come in, and the kind of growth opportunities we see in the African continent, as you rightly said, Tanzania and Kenya are large growth markets. So, on a very normal basis, can we expect at least our top line growth to grow by say 20-25% every year? Without giving an absolute number, if you could just share an outlook, what you can talk about the company over the next say 2 to 3 years. Today we are 46 crores. So on this small base, can we assume that 20-25% का growth comfortably 2-3 साल on a CAGR basis is very much possible, or it can be better according to you?
No, it is very much possible, especially with the kind of because now we've got access to funding as well with the IPO. So we have that liberty to grow our business significantly, both in terms of the existing business, existing facilities as well as the new facilities. So definitely, we are targeting a significant jump on a CAGR basis over the next 3 years. What you mentioned at 25 odd percent, that is definitely the benchmark. That is something 20% odd that is we've been witnessing over the last couple of years as well, if you have to look at it historically in terms of the numbers, and that we have been able to do without access to the funding, or it was basically the internal accruals itself that were being churned
Yeah,
out. But now with the access to the funding raised from the IPO and the deployment both in terms of capex and working capital, we are expecting a significant jump in the growth, maybe to some extent in this particular fiscal, because the access to capital came only after half the year was already done with. But yes, from the next year
yeah.
onwards, we will be expecting significant jump.
No, fine. Last question now, Dr. Akshay. Like, every business has got some risk attached. So in our business also, there is obviously there must be some risk. So, as an entrepreneur, what is your experience? Like, till now everything is going smoothly. Even in future, things will go, smoothly. Typically, हमारे business में, what is the single most risk, and how do you manage to mitigate that risk? If you could tell us.
Right. So I'll take this in two halves actually. The first risk which comes to everyone's mind, whether it's an investor, it's a shareholder, whether it's a common man, when we talk about Africa, is the geopolitical risk. The political scenario or the security scenario. But to be true, with our experience since 2010-11, initially in the medical tourism industry and later today, now on-ground presence in these countries with a team size of more than 500 odd people, on ground geopolitical risk is not as grave as it seems in the international media. So be it countries like Nigeria or Uganda or Tanzania, all those places are fairly safe on ground. We've not really had any major issue in managing our businesses over these years. So the geopolitical risk factor, which ideally from a layman's perspective would be at number one, typically does not stand at number one for us as the management of UniHealth. For us, what is more important is the currency risk. So, traditionally, if you look at currencies in Africa, they are known to depreciate in a very erratic manner. So, you may have a year where the fluctuation is just about 5 or 7%, but then there may be a sudden depreciation by even 30% overnight. So that is one risk factor which is always there. And since the beginning, since we had experience of this, and unfortunately, even the Indian rupee, since when we started the medical tourism, it was somewhere around 44 Indian rupees to a US dollar, to what it has almost turned out to be 83, 84 today. So looking at all of this, what we have done to mitigate this risk is that on the income side, we review our pricing matrix on a regular basis, and we've aligned it to the exchange rate. So all these
Okay.
specialty services are aligned to an exchange rate where the actual pricing is in terms of US dollars. So for example, for a knee
Okay.
replacement, we are charging $3,000. It gets converted into the local currency, and we keep reviewing this on a regular basis. Only the entry
Okay.
points is something that we align with the local markets. On the
Okay.
expenditure side, again, since majority of our working force and the expenses are on ground in local currency, it's not that big a risk. So just two factors play in out here. One is expatriate manpower, which we've reduced considerably. So again, that risk is mitigated to a large extent. Second is the cost of inventory. Now, cost of
Okay.
inventory, because these are import dependent, that is again something that keeps fluctuating. So for us, because we are also distributors and we ourselves are exporting material from our Indian subsidiary to these joint venture companies or associate companies or subsidiary companies, we tend to maintain the payment cycle in a manner where we are not stretching it to a times period where the currency deviation can play a factor. So the moment
Okay.
the invoicing happens, we tend to ensure that the payments are also received by our
Okay.
subsidiary in time before there's a major
Okay.
currency deviation.
Okay. So I think this currency factor which you mentioned, Dr. Akshay, is very notable because by aligning your charge as per dollar, as per the US dollar, I think to a certain extent you are hedging the volatility, which is very important. So that is something very nice to hear. In fact, Doctor, thank you very much for your valuable time today with us. In fact, we could understand your company's operations much better. And viewers, if you like the video, please like it and share it so that all of us can get the valuation of knowing about UniHealth Consultancy. My best wishes to you, Dr. Akshay, and to your entire management team. And we do hope that in future also we'll connect
Thank you,
Thank
Avinash.
you.
It has been a pleasure interacting with you and with all your viewers. And I will definitely look forward to connecting with you soon to share more details about UniHealth Consultancy and the growth prospects that the company has.